What's up everyone, welcome back to a new video on the Alien Agro channel. Today we will be going over a more educational based video where we will be looking at lower time frame execution and how you can utilize the Heikin ashi candles to your advantage while trading those lower time frames. I don't suggest you guys to use this on higher time frames. I suggest you to keep this below a 5 minute to give that most accurate data. So with that having said, let's get straight into it. So what can we see here on the chart? You can see that I've already selected the Heikin ashi candles. The Heikin ashi candles, as you can clearly see, they are quite different from regular candlesticks in terms of the data they give and the way the bars are displayed. There is a massive difference, and I will dumb it down to the fullest. So with that having said, let's get into it. So what does Heikin ashi do? As you can see here, the difference again. Let's just look at this move to give one example. Here you see the price going up. You have two red candles in between this move before that top is being formed, and you get that move towards the downside, where yet again you have one red candle. The moment it flips, you have one green candle and another green candle. So now I want you to keep this part of price action in mind. So now that I switch it to Heikin ashi, what do you guys see? Instead of two red candles being displayed, one right around here and the second being right around here, you only see green candles. Why? The Heikin ashi gives you a smoothed look on the market. So it gives you an average of multiple candles to make it as easy as possible. The way how you can read Heikin ashi candles is quite simple. The larger the candle, the more volume inside this move. So you quite by now should know this is a clear shift in terms of price, which is being replicated right here on the candlesticks. Well, on the candlesticks, where did you get your reverse? Your clear reverse right around here. So let's put a vertical line right there and switch it over to the Heikin ashi chart again. So the Heikin ashi chart quite literally allows you to be in trades for the fullest. Because you have to think about it like this. While you're inside alone here, these two candles can make you question, should I enter or should I exit already? Or maybe should I flip a short, and then here you see you get fucked on that short until this one. So then the question is, do I need to short here, here, or here? When I switch it back to Heikin ashi, you quite literally see that this was not shortable. This was not worth shorting it. Until here. Okay? And now, this, of course, is way too simple, and this is just not how it exactly works. Well, at least, this is how it works, but how can you utilize it to the best? Because you also see here, there are multiple fakes. So, how can we make this Heikin ashi chart a lot stronger? What do? We add our logical levels. So for this, I will be starting at that candlestick chart, and I will go into the 3-minute time frame, which is a time frame I really like a lot. So with that having said, let's just draw some logical levels. So we have to think of it like this, because now I'm just doing it sort of live, but also not live, because we have some historical data here to use. But for this example, I want you to think of price is in this area. And we are looking either to catch those lows or to catch those highs. So what do we see? We see here, this is the candle that made that move towards the downside. This is the part where we had compression before going towards the downside. Okay, so this part, the most extreme point, and these 2 points. So with the logical staircase, what do? We look at this part of the staircase and we look at the low and we look at the high. And we look at the extreme. So, just to redo it again, we have the extreme here. We have that short compression right here, with this being the low and this being the high. So this area should be either a key area to flip, or it will be a key area to reject from. Logically, it can also be like this, right? So now that we have our levels at the top side, now let's find them on the bottom side. So the move that was formed by this was started over here. So this is also another level we will be looking at, because this is what started that upwards move. So how do we do this again? We get the extreme, and in this case there is no logical short time frame compression in between. So what we will be doing, we will be looking at this previous wick, because this is what got swept where we pushed up from, right? So these two will be my points of interest on that downside. So now let's switch back to the 1 minute now that we have identified our levels. I will add one more level, because this does seem like a valid level. It has not been respected that much, to be honest, but it has been respected a couple times. So I will just draw it as well. Right here, which is approximately in the middle of these levels as well. So when I do it towards the left, you see right here, also a couple hits. Here, also a couple hits. Compressed a little bit below, found acceptance above it, and started going back up. Here again, you see it. Going below it for a short period of time, explosive, move back up. Finds acceptance below it, compresses, breaks, retests, starts to move up, which is where that high was created. So these will be our levels. So this is where you start at. Okay, this is the 3 minutes, so this will only be applicable for lower time frame analysis. You can, of course, do this for higher time frame analysis, but then I would just stick to candlesticks and fully ignore Heikin ashi. So this video is purely about those lower time frame executions. So now that we go onto the Heikin ashi chart, and you have to think we've drawn the levels as if price was trading inside of here. Yes, inside of here is where we were looking. So what are the levels to play? This, these, and if we get it, this, if we get it, this, or this, right? So now we will be going towards the right side. And I will zoom in a little bit, and you should already see what is happening. Because when are Heikin ashi candles the most useful? When they get formed around a key level. But this is really telling you when that momentum is shifting on those lower time frames, because it gives you a smooth look on the market while giving that average of candles. So this candle could still have been green. When we look at the candlesticks, let me quickly check if this, yeah. Here we see it quite clearly in this case, but that Heikin ashi just makes it so dumbed down that it is way easier to spot. So what do we see? We see price coming down into that level of interest, right? This is where we want to either buy a pullback, find acceptance below, find that retest, and play it back down. Two scenarios, of course. It can hold, you play it towards the upside. It can break, you play it towards the downside. Quite simple game. So with that in mind, what do we exactly see here? The logic I explained earlier, where the candles that get smaller, and this is usually where a reversal could happen on those lower time frames. So here we see that move towards the downside. We see price starting to compress a little bit. Then we see a couple candles right here. It starts small, becomes bigger, becomes bigger, becomes even bigger. And here we get a smaller candle. So what does this tell you? That the downtrend is weakening, because otherwise this would have been a big red candle, right? The next part, this is getting formed around that key area we were looking at. Next up, you literally see it turning green, which gives you that reversal towards the upside. Where does it reject again? A previous high, right? So what would be your target here? Let me literally illustrate it. So you wouldn't be playing it on this one, you will be playing it on the close. So you will be opening your trade when this candle has closed, meaning you would have opened it on this open and not inside this candle or here. This is not realistic backtesting. So where would that stop have been? Quite logically, that previous low. Where would your dear PB? Next side liquidity or resistance area, however you like to call it. Why do I see this as a resistance area? Price went down, and this is where we started to compress at first. We tried to push through it, we just did not get it. Later we retest this zone, right around here, and then we go down. So this was my key area of interest for that TP. Well, I literally see how it went down. The second way how you can use these Heikin ashi candles, you literally see the shift here. So if you want to be a little bit on the safe side and you just purely want to follow Heikin ashi, what do you do again? The exact opposite. So how did we enter here? We waited for this bar to close to confirm that trend shift. So now let's apply the same logic here. So what would have been your exit? Right, that close of that candle, meaning the open of this candle. So you see this trade is a little bit smaller, right, than a full TP would have been if we were looking at TA. But this is majorly used for momentum-based plays and trend-based trades. This literally tells you when the trend is ending. And here, what do we see again? Because then, of course, you have to know you can play both sides. You can try to flip your position back towards the downside, but this is not really my style in terms of 1 minute trading. I might do this on a 3-second chart or a 5-second chart, but not on a 1 minute chart. So in this case, what could we have done again? Is here we would have simply went out of the trade, right? Small profit, quick profit. Couple minutes, this trade literally would have taken right about like 9 minutes. So what do we see next? We see price grinding down again, full red. What do we see? We see price is starting to compress here, right? And what happens at the same time? Those candles are getting smaller. Big, 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 small, right? So what happens right after? You see it? That green candle again. And this is where your lower time frame trend starts again. Okay? Now, I want you guys to only keep this Heikin ashi in mind when it hits a key level, because it is a very useful tool to find whether the trend really is shifting around that level. Because let's say that resistance was here, and we would have broken that resistance. These candles would have just kept going green. Maybe a little sideways first, but they would still be green. Here you clearly see it changing around the previous level, right? And that is that lower time frame shift. So now again, you have this as that point that created this move up, which also is correlating with that blue line that we have plotted. Here again, you get the same exact logic, right? And now you already see, where do we reject? That previous high, right? So this could have been your TP, or this candle would have been your exit. And to be more precise, this candle, because you want to wait for the close of this and exit on this open. Right? So, now what do we get after? Let's look at this. This is sadly something that we would most likely not have traded unless you draw new levels during, because here you see some sort of support slowly being created. See multiple taps, later you retest it, and you start getting some green candles again. But this, realistically, we would not have traded this based on the levels we have drawn at first. So, what do we get? You see it? The trend is shifting around one of our key levels. And the Heikin ashi chart is a really great way, because I'm not telling you guys that this is the best way to trade reversals, right? I am telling you guys that this is a great way to keep you in the trade. Because when we were looking at this move, let's say we were short right around here. Right? And let me do it again properly on that open of the new candle. What will we be targeting? That previous level. So this is most likely where you would have exited the trade, either here, or right at the blue line. For now, let's keep it simple. That blue line would have been our TP, right? Now, I want you to look at where the first green candle has been made. I will put a vertical line on it right around here. So, now let's go over to the candlesticks. Here you already see this. This can make people question, do I need to get out of this trade, yes or no? With Heikin ashi, the first green candle that you had seen was here. But now look at the candlesticks. 1, 2 times to question yourself. Do I need to get out? Do I need to stay in the trade? Should I maybe exit a little bit? Do I need to put my stop on break even? Do I need to start trailing my stop? These are the type of questions you get when you see a candlestick coming the opposite way of your trade. So, how do we solve this? That's Heikin ashi chart. So, when does the candle shift? Right around there. Now look at the size difference in terms of the trade. Just because we were looking at price in a smooth way. So a thing I used to do a lot back in the days when I was still trading this 1 minute time frame instead of the 15 seconds and the 5 seconds, I used to get a candlestick chart because I do find it gives most accurate data. Of course, a candlestick gives you the high, low, close, and open. So this is the most accurate data you will ever get, simply based on candlesticks. Footprints, of course, are a next level thing, but these are I won't be talking about right now. So let's get into that Heikin ashi again. Because the thing that I used to do is I will map out my levels and I would take my trade using the candlestick chart. But I know this can make you question yourself. So when I wanted to see if I should exit the position, I had 2 types of signals. Either that the Heikin ashi bars are getting a lot smaller, or we see a doji being formed. I will try to search for doji in a bit. I already see one, but I wanted to explain this to you guys. So how did I do this? I would just open a short or a long, of course, depending on the way we got the price action. And next up, I would keep myself inside the trade until those Heikin ashi candles flip. And this really is that thing how you can turn a quick little scalp that was supposed to be something like this, or this, and turn it into a bigger trade. Right? So, what is a doji candle? Because a doji candle is most likely a reversal pattern. Within a doji candle, most people don't really know this, but it also occurs on candlesticks, but it is way better visible most of the times on Heikin ashi charts. So Let's quickly find one. I've already spotted one. Right here. So this being this exact candle is from 11:15. This is your Heikin ashi candle. And then the doji version, which usually signals a potential reversal. Right? Potential reversal. So how can we know if it really will reverse there? There are two ways. A doji candle will be formed around a key level, like it is doing right around here. You create that new support area, right? Let me draw it again. Here. You create that new support area. You start to, after this move down, you start to compress a little bit. Those candles are getting smaller. You get an Heikin ashi candle. And you get a tiny reverse back up. Right? And what do you again here get? This isn't the total doji candle, but this can already be a signal. Why? Because you see these bars are big. This one is getting smaller again. Here you see the same logic. Those bars are big, bars are getting smaller, you start to reject. Bars are not really that big, but they are getting more in size, and here they are slowing down in terms of size. And this is where that reversal happens. So, with that doji candle, there are two ways to use this. Because the doji candle in itself does not say that much. It usually signals you could get a potential reversal. Okay? So, how can we know if it really will reverse? If it's not potential, but how can we confirm it? That's the question, of course. So, you look at this candle, and you want that next candle to be in the direction. English isn't my first language, so in the direction of the reversal, you want this candle to be. And then this next candle is bread and butter, because you want to trade on this open, and here again you have a very short trade, but this is a likely high probability trade, which we like the most, of course. Okay, the second way how to use these Heikin ashi candles with the doji version is quite simple. What do? We get that Heikin ashi doji candle, we put a box on it. We want to see a retest. And you already see it start to go up. Where does the lower time frame trend shift again? Right here. You see these candles getting smaller, right? And this is where price has started to form a resistance. Where does this happen again? Right, your previous high. So this is what I call ladder trading. This is the next concept I will be going into. I will explain this to the most basic. What do? I will do this on a Heikin ashi chart actually. The ladder logic. The ladder logic is quite simple. From here, let's say this part of price has not happened. So we are only here, and all this has not happened yet. Okay, I will draw it on a logical basis from this inside knowledge, right? Here you have your high, here you have your low. Okay, this became your new low, because this is the candle where we moved down from, we started to get support, and we started to move up from, right? So this is, and hold on that downwards move, and it started a small upwards move. So this is a level we will be watching. What later happens? See, starts to hold. Okay, you would most likely have gotten a very tiny losing trade, and right after you were able to trade this breakdown. Right? Because the thing with ladder trading, what do? Ladder trading, you most of the time take a lot of positions. You take a lot of trades over the day, because there are so many levels and you are using all of them. Quite simple. So, how do we use them? we would be longing this, where we would, if the risk management was really strict, we would have been stopped out at break even. If not, you would have only made a tiny loss because the stop loss would have been right around here, which would have been tagged on this candle. What do we get after this candle? Because now we know we have been stopped out on this idea, either at break even or at that stop. So what do we get right after? A break with that retest. So now that we got fucked on the long, what can we do? We flip it. We go short instead. Because we see a clear breakdown from that low that we wanted to see hold. So we now know if that low does not hold and we get stopped out, it most likely will continue. So yet again, we go down, right? Now we created a new ladder. So now you again have this little part, which we will not be taking, but this will remain valid for now. And the new ladder point that we have made is this. So here, if price ever comes back to here, we might be interested to buy again. Okay? Now, the next point. We see price moving up from here, getting resistance right around here, and from where do we get resistance again? This previous area. Yes? But now we have created a new local resistance, a new local ladder. So this now is not important anymore. Quite simple logic, right? It gets pinched, we say screw this level, we find a new one. So what do we get? We start to reject from this initially, start to create this little resistance, move down, and look up what is happening again. That Heikin ashi starts small, becomes bigger, starts becoming smaller again. And we get a green candle right after. Then we start to break this. What can we do with this? Of course, we long this simple breakout. Right? Where can we exit again? Previous highs. Or when that momentum starts to fade. If you want to be early and front run your TP. Or try to extend it using the smooth Heikin ashis. Quite simple. So, what can we get again? Here, now, created this point. Because this is where we started to reject from. What do we get again, guys? You come back into that level. Look, I will even draw it like this so it's a little bit more clear. What do we get? Lower highs. With us rejecting this box 4 times. So what can we expect here? A downwards move. What does the Heikin ashi tell us? We had this retest, and now we are starting to shift that momentum. Because why did we not take this part? There was no clear level here. Right? There was no clear level. Simply no clear level. Here, no clear level. So this we were not taking. Why? It did not come back into a decent level we wanted to see it trade into. So, we took this trade on the downside, right? Now, let's find that new support area. This, where can we exit again? Previous staircase. Right? The ladder logic. So here again, if we wanted to be early, this would have been a decent TP. But this would have been more likely, and when you look at the Heikin ashi, when does it shift? Right after it bounced into here. So now, this is your new ladder. And where did it get into? Of course, that previous ladder. You see it, how they overlap already. When they overlap, you quite literally have a double confirmation, which is the best thing you can get most of the time. And now this is just me simply explaining the ledger logic using the Heikin ashi, because this strategy also works on candlesticks, but now I'm just illustrating it on Heikin ashi because I want this video to be focused on Heikin ashi. So here again, we see this momentum starting to gain. What do we get? Smaller candles. And this is where we start to compress. What have we created again, guys? A new resistance. Every time you start to compress, you usually have created a support and a resistance, right? So here we have a lower time frame support as well. What do we get from this? We get a break and a retest and a switch. And again, a small little trade. So this is only used for scalping because ladder logic, it's if you do this on a higher time frame, you most likely will just be better off using some shit like order blocks or just a logical trend filter, whatever. No scalping, this is a really useful strategy. So now again, where do you create that resistance? Yet again, right? And if you want to be a little bit more general, you already had resistance here, again here, multiple taps, and you see what happens right after. A doji, a retest of that doji, and you go down. And this again, it looks like a really shitty tiny trade, but just remember that if you're doing this with high leverage, this is just 19% gain within 2 minutes time. Right? So this is what I mean with when you learn these types of analysis and these types of trades, you can literally take so many trades on a day, it's kind of insane. And now, what do we see here? You see momentum starting to fade, right? That doji candle gets made, and we see a switch. When does it happen? At a previous resistance, guys. And you see already we have started to compress here, because you know the logic by now from here and here. The moment we get a move towards the downside or towards the upside like this, the point where you get pushed back up on a lower time frame, just like here you get pushed down. This becomes your resistance. You expect this to be resistance. So if this breaks, you most likely will see continuation. If it doesn't break, you most likely see either a full reversal or just a reversal to create a higher low, depending on the trend direction, of course. So this is now our new support from the moment it dropped down to here. So this moment, and it started to move up again to here. Now this is our support. And remember, we only take these types of trades when it trades into one of these levels. Now you already see how I just mapped out these easy levels. And it's really not that hard. When you think about it, you just need to learn this simple concept. Because this really works on any time frame. When we just look at this here again, you see it? And where do you reject from 2 times? I can't make it more clear than this, yes? See here? The next candle even, you get that initial rejection. You trade into it a second time, you get another rejection, this time a bigger one. And you get a third rejection, and this time also a bigger one. And then let's look at this downside again. Where do you trade back into? Your previous compression. Right? This again was shown as a compression on that lower time frame. Right? This is where you trade back into. Reversal happens. You buy here. Ta-da! Back to the highs. Here, reversal happens, you buy here. And it starts growing up. This is just the easiest way to look at price in terms of those lower time frames. And I just illustrated it that this also works on higher time frames, but this concept is most powerful on those lower time frames. Because what are you really trying to do? With this, you are trying to catch those tiny moves. It's not like me trying to catch these types of moves. No, this is just if these types of trades happen from it. it's great because the Heikin ashi just keeps us in the trade for a shit while, as long as the trend just doesn't reverse, right? But the real objective here is just to catch these types of short trades, where you have just a little logical break, a logical bounce from support, a logical rejection, a logical bounce from support, a logical rejection, and you just get a lot of trades, which are very tiny trades, but they add up. Because here again, illustrate this, what is of course your stop loss then, logically that resistance area that you are trading it from, where do you exit the trade? Either when it starts catching support, or when that candle starts to shift. Here again, a quick 11% gain. Okay, starts to break up again. What do? You buy again. Where's your stop? This is not a realistic entry. Let's say you've entered there. What becomes your stop? This becomes your stop. What's your next TP? Either those previous highs, or when that resistance starts to be made, and here that shift happens. So this again was your trade. Here again, a quick 17%. Looks very small, but I will just keep doing this for you guys to illustrate it. Right, and now I did not even flip the position here. I waited for this break. Check. So here again, here the stop is a bit wider. Where do we trade it back into a previous level, or when it starts to shift? So here again, a worse RR, but still 18% gain. And let's say inside of it, we had a worse trade. We had a losing trade right around here, where we would have had our TP right around there. My excuse. And where would have been our stop? Below this box. So now for the idea, let's just say we had been stopped out. You already see this. Okay, no, this is not realistic. We would have entered here, and we would have been stopped out for about 5%. Okay, no TP hit after the full TP got hit. So what could you have done here? I would not suggest it for most people. I do allow myself this, where I say I have a 2-trade system. When I take a trade based on the higher time frame support, it can always be that you enter and it just sweeps liquidity and just takes you out of the trade. But most of the time it will reverse there. If you reopen a trade and you get stopped out after, it is most likely a real break, where you don't want to be longing the sweep of the sweep of the sweep of the sweep. That's just not how we trade, right? If a sweep of a sweep of a sweep happens, it's just a break. Don't make it harder than it needs to be. So we could have taken this trade, where we revenged it back up. Here it starts to make a resistance again. This would have been our exit. Where would the stop have been? Either here or here. Quick 17% again. Let's say we just didn't even take this trade. We go into this. Right here. We see that resistance being formed. We see that doji being formed. Now that doji has been formed, we want to look for a possible reversal again. It retests this. Let's say we had entered here, and our stop has been here. What was our target? Previous staircases. Right? So this would be our trade. This would have been one of the worst trades, but it still got hit. Right? Here, a couple minutes. This literally would have taken 2 minutes to exit. Maybe even the same minute if you were fast. So, what again do we have here? Let's say this would have been a losing trade, just to illustrate the idea. We would have entered prematurely, and we would have had been stopped out. You already should know by now that this is not the way to trade this strategy. This is just to illustrate the idea of the risk management being used. Right, here we see that new compression. It gets retested again. Where do we enter? Right around there. Where's that stop? At that previous low. and where's our TP? At that box. So now let's just go over them. Plus 11, plus 17 makes plus 28%, plus 18 makes, from the top of my head, 46%, minus 5 makes plus 41%, plus 10, you should know the drill by now. I'm not even going to count it anymore. But you guys should understand the logic by now. You don't need to win all the trades. As long as you have strict risk management and you use proper sizing and just don't size up on trades and be like an idiot and don't use a stop loss, no, you're a scalper. Every scalper has a stop loss. Every trade has an invalidation, otherwise it's just a shit trade. And it will most likely be a loser. How can you find your stops? How can you find your bias? I've made a video before calling a bear bull invalidation a very strong concept for those higher time frames, but this logic can also be applied to those lower time frames. So I see this video has taken a lot longer already, so with that having said, I will keep it at this. And again, to illustrate the idea again, what you get: a rejection in a key level, a doji being formed, a trend shift, and you move down quite fast. Right? You start to compress again, candles getting smaller. This could have been your exit if you want to front run that flip of that Heikin ashi. Can it keep continuing? Yes. So this is why you either follow the Heikin ashi or you wait till it drops into support or when it flips. Okay? So with that having said, guys, I hope you liked the video. This was a little bit more educational. So stay tuned for the daily market outlook. This will be uploaded not that much after the New York Open. So guys, have a nice day and keep trading. Bye.